Hi, I'm Aradhna Agarwal. I am a CPA, and my goal is simple to help everyday people understand taxes without fear, confusion, or jargon. Let's talk about your car, or more specifically, how your car suddenly becomes very important the moment you start a business. Because once you are self employed, your car is no longer just transportation. It could be a tax deduction, a record keeping project, and occasionally a source of regret. Today I'm answering the question I get every year: mileage or actual expenses? Which one is better? The answer is it depends, not in the annoying way you think. People usually approach this decision like this: mileage sounds easy, actual expenses sound fancy. They say, I will do actual expenses because that sounds bigger. That's like saying, I will order everything on the menu. It sounds impressive. The IRS does not reward ambition, they reward accuracy. When you use your car for business, the IRS gives you two ways to deduct those costs: mileage method and actual expense method. You don't get to mix and match freely, you don't get to guess. This choice affects your deduction this year, your record keeping, and sometimes future years. Let's break this down simply. Mileage method, the simple one. The mileage method is exactly what it sounds like. You track business miles driven, then multiply it by the IRS mileage rate for that tax year. That rate is designed to cover gas expenses, maintenance, insurance, wear and tear. This method is simple, low paperwork, popular with freelancers and consultants. But this is important. You must actually track the mileage. Not, oh, I drove a lot. You have to track dates, miles, and the purpose. The IRS is very literal. The second method is actual expense method, the detailed one. Now let's talk about the actual expenses. This method looks at what your car really costs. Things like gas, repairs, insurance, registration, depreciation. Then you deduct the business use percentage of those costs. If your car is used 40% for the business, this method will allow you to deduct 40% of the eligible expenses. This method can create larger deductions only if the car is expensive or used heavily for business and you keep excellent records. Excellent is doing a lot of work in that sentence. Here is where people go wrong. They choose actual expenses because they think my car costs a lot, gas is expensive, this feels more aggressive. Then they realize they didn't track miles, they didn't keep receipts, they don't actually know their business use percentage. At that point, as doesn't say, it's okay, do your best. They say, no documentation, no deduction. Here is a rule that many people miss. If you use the mileage method the first year, you usually preserve flexibility for later years. If you use the actual expenses method first, you may lock yourself in. That decision can affect depreciation and what you are allowed to do going forward. This is not just about this year, it's about future years also. Which one is better? Here is the honest answer. Mileage is often better if you drive a lot, your car is reasonably priced, you want simplicity, and you don't want receipts chaos. Actual expenses are often better if the car is expensive, business use is high, you are organized, you are okay with more documentation. There is no smart or dumb option. There is only supported versus unsupported option. Let's talk about what the IRS actually cares about. They don't care which method you choose. They care that you qualify, you are consistent, and you can prove it. Mileage without a log is not real. Actual expenses without records are not real. Your deduction has to survive a second look. The real strategy, the smartest move isn't choosing the biggest number, it's choosing the method you can track correctly, defend confidently, and maintain consistently. A smaller deduction you can prove is always better than a larger one that you can't. Mileage versus actual expenses is not about maximizing deductions, it's about choosing a method that fits how you usually use your car, how organized you are, and how you want to manage taxes long term. The IRS does not penalize you for choosing the simple method. They penalize you for choosing the wrong one without proof. Taxes don't reward guesswork, they reward consistency, documentation, and intention. Thank you for watching. Follow me for tax education that is practical, legal, and designed for people who use their car for business, not just for commuting to coffee. Subscribe to our free newsletter, link in the comment below.